Good day, everyone! I am Kesha Camille E. Mercades.
And I am Lalaine T. Pag-ong.
And we are the reporters of Chapter 12. And our topic is all about owner's equity,
Revenue and expenses.
Learning objectives. After studying this chapter, you should be able to understand the nature, types, characteristics, advantages and disadvantages of a corporate organization. Know the basic items included in the shareholders' equity section. Know how to account for share issuances and related transactions. Know how to account for acquisition of share capital. Understand the accounting for donated capital and assessments to shareholders. Know the accounting for share splits, reverse share split, rights issues, and warrants. Understand the nature and items affecting the retained earnings account. Know the types of dividends. Know how to account for dividends declared and distributed. Know when to recognize and how to measure revenue and expenses. Nature of owner's equity. Owner's equity or shareholders' equity for corporations refers to the difference between the recorded assets and the recorded liabilities of an entity. When we say shareholders' equity, it is a residual interest and has no existence without the presence of assets. Shareholders' equity is not a claim on specific assets, but rather a claim on total assets after liabilities are recognized. It is sometimes referred to as net assets. Owner's equity is the net contribution to the firm by the owners plus the firm's cumulative earnings retained in the business less any reacquisition of the company's shares. So there are two concepts of capital, and those are financial concept and physical concept. A financial concept of capital is adopted by most entities in preparing their financial statements, while the physical concept of capital should be used if the main concern of users is with the operating capability of the entity. The concepts of capital maintenance. The first one is the financial capital maintenance. Financial capital maintenance can be measured in either nominal monetary units or units of constant purchasing power. Net assets are simply measured as assets minus liabilities. The second one is the physical capital maintenance. The physical capital maintenance concept requires the adoption of the current cost basis of measurement.
Next, we have the fundamentals of corporate equity accounting. So there are three primary components of the shareholders' equity, which are the contributed capital, the retained earnings, and other comprehensive income. So let's start first with the contributed capital, or sometimes called as the paid-in capital. So bali dito, sa contributed capital, meron siyang category or meron siyang dalawang types, which are the share capital and additional paid-in capital. Share capital represents the amount invested by shareholders when they purchase shares, ordinary or preferred at par value or stated value or other diagnostic value. So, ito lang share capital, ito yung pera or yung amount na ininvest ng isang shareholder sa isang company noong nag-purchase sila ng isang share. Preferred at par value. So, when we say par value naman, ito yung stated value or yung fixed na value ng isang shares or pwede din ng isang stocks or ng isang bonds. So, once na meron ng par value yung isang share, yung company hindi na pwedeng mag-issue pa ng further shares below par value para yung investors, meron silang assurance na yung company ay fair yung treatment sa kanilang mga investors. And the company must not issue further shares below par value, so investors can be confident that no one else will receive a more favorable issue price. Next, we have the additional paid-in capital. It is refers to capital contributions from shareholders to the corporation other than the par value or stated value of shares. So, when we say additional paid-in capital naman, like for example sa stock, ito yung binayad ng mga investors for stock na lumampas na or nag-exceed na siya sa stated value or sa par value ng isang stock. So, since mababa lang naman yung pag-set ng par value ng isang stock, sa katunayan, nasa cents lang yung pag-set ng par value ng isang stock, kadalasan or most of the amount na binayad ng investor para sa stock ay napupunta lahat sa or nare-record lahat sa additional paid in capital. Next, we have the retained earnings or accumulated profits or losses. This represents the accumulated net income earned from the inception of the corporation and not yet paid to shareholders as dividends. So, itong retained earnings, ito yung makinita ng isang company or isang corporation noong nagsisimula pa lang yung operation ng kanilang business, which is kailangang hatian or kailangang bigyan yung mga shareholders nila. Which is dito sa retained earnings, meron lang na-earned na income yung corporation pero hindi pa nabibigyan yung shareholders. And there are two subcategories of retained earnings, which are the unappropriated retained earnings and the appropriated retained earnings. Ang unappropriated retained earnings, ito yung mga amounts na available para sa distribution ng dividends. Ang ito namang appropriated retained earnings, unavailable na mga amounts for dividend distribution. And the last one is the accumulated other comprehensive income. A possible third category of shareholders' equity found in many financial statements is accumulated other comprehensive income. So, meron tayo ditong mga examples ng mga items na belong or reported sa accumulated other comprehensive income. First is the unrealized holding gain or loss on investments classified as securities at fair value through other comprehensive income. Next is revaluation surplus arising from property appraisal. Next is foreign currency translation adjustment. Next is deferred gains or losses on derivatives. Next is change in fair value that is attributable to changes in the liabilities credit risk for particular liabilities designated as at fair value through profit or loss. And the last one is the remeasurements of defined benefit plans. Accounting for share issuance and related transactions. Corporations may engage in a variety of transactions related to the issuance of share capital. Issuance of share capital for cash. A corporation may issue share capital with a par value or as no par share with a stated value or a non-par share without a stated value. Share capital sold on a subscription basis. A corporation may sell share capital and credit anytime after incorporation. Such contractual agreements are known as share subscription, and the share involved is called subscribed share capital. So dito, yung corporation daw ay pwede magpautang ng shares or yung mga shareholders ay pwede mangutang ng shares sa corporation. So yung shares ay pwede utangin. Pero merong agreement between the two which known as a share subscription. So sa share subscription, bali dito merong promissory note or agreement na babayaran ng shareholders yung utang niya na shares sa corporation.
Issuance of share capital for non-cash assets. A corporation may issue share capital for assets other than cash or services performed. Issuance of share capital for services. In compliance with both legal and PFRS 2 provisions, if shares are issued for services already rendered, the shares shall be recorded at the fair value of such services or fair value of the shares issued, whichever is reliably determinable. Share issue cost. Issues of share capital can entail substantial expenditures. They include items such as registration fees, underwriter commissions, legal fees, accounting fees, share certificate costs, promotional costs, and postage. These expenditures are called share issue costs. Shares formally retired. When a corporation requires its own shares, those shares assumes the same status as authorized but unissued shares, just the same as if they never had been issued. When shares are sold, both cash usually and shareholders' equity are increased. The company becomes larger. Conversely, when cash is paid to retire shares, the effect is to decrease both cash and shareholders' equity. The size of the company is literally reduced. Donated treasury shares. Shareholders occasionally donated shares to the corporation to enable it to raise funds through their resale. Since these shares are received without any consideration or cost, the entity's assets, liabilities, and shareholders' equity remained unchanged, but the number of outstanding shares is reduced. Donated capital. When we say donated capital, it can result from an outright gift to the corporation. Assessments on shareholders. When a corporation is experiencing major financial difficulties and onerous external borrowing could not be availed of, one option that the shareholders could do to infuse the much needed additional capital is to assets themselves a certain amount per share owned. Share splits. A share split is a change in the number of shares outstanding accompanied by an offsetting change in the par of stated value per share. Reverse share split. A reverse share split involves a proportional increase in the par or stated value per share and reduction in the number of shares issued and outstanding. Right issues or warrants. When we say right issues, it are often issued by corporation to give the specified number of shares of share capital under prescribed conditions and within a stated period. Evidence of ownership of rights issue is a certificate called a share warrant.
Next, we have the retained earnings. Nature of retained earnings. Retained earnings, also called reinvested earnings or earned surplus, represent the firm's accumulated net profit or net loss, including prior period adjustment, less accumulated cash dividends, property dividends, share dividend, and other amounts transferred to the contributed capital amounts. Retained earnings is the primary link between a corporation's statement of financial position and income statement. Meron din tayo ditong T-account na nagpapakita ng mga items na nakaapekto sa retained earnings. So, sa decreases or sa debit side, yung mga item na nakaapekto ng retained earnings ay yung mga net loss, correction of accounting errors of prior periods, cash of dividends, property dividends, scrip dividends, share dividends, treasury shares, share retirement transactions, cumulative effect of change in accounting policy, and the appropriations. While sa increases naman or sa credit side, yung mga item na naka-apekto ng retained earnings sa credit side or sa credit side ay yung mga net profit, correction of accounting errors for prior periods, removal of deficit by quasi-reorganization, cumulative effect of change in accounting policy, realized revaluation surplus adjustment, and reversal of appropriations. Next, accounting for revenue. Revenue recognition principle. Revenue and gains are recognized when two conditions are met. An item that meets the definition of an element should be recognized if it is probable that any future economic benefit associated with the item will flow to or from the entity, and the item has a cost or value that can be measured with reliability. Under the accrual basis of accounting, revenue is recognized at the point when goods are delivered and when services are rendered, or where exchange of values has taken place. So, alam naman siguro natin na hindi mo ma-recognize yung revenue under the accrual basis of accounting once na yung product or yung goods na ino-offer mo ay hindi mo pa na-deliver sa customer mo, or once na yung product ay hindi pa na-receive or natatanggap ng customer mo. Or kung services naman yung ino-offer mo, hindi mo ma-recognize yung revenue once na hindi ka pa nakakapag-rendered o hindi mo pa napa-perform yung services na ino-offer mo. Let's say, for example, ako tigo-organize ng kasal. Hindi ko ma-recognize yung revenue or yung kinita ko once na hindi ko pa natapos yung trabaho ko, or once na hindi ko pa na-organize yung kasal nila. Kahit na nakapagbayad na yung customer ko sa akin in exchange sa service na ino-offer ko, hindi ko pa din yun ma-organize once na hindi pa ako nakakapag-perform ng service. Ma-recognize ko lang yun pag natapos ko na yung trabaho ko, or pag na i-render ko na yung service na ino-offer ko. Recognition. An entity shall account for a contract with a customer that is within the scope of this standard only when all of the following criteria are met. First, the parties to the contract have approved the contract in writing, orally, or in accordance with other customary business practices, and are committed to perform their respective obligation. Next, the entity can identify each party's right regarding the goods or services to be transferred. The entity can identify the payment terms for the goods or services to be transferred. Next, the contract has commercial substance. The risk, timing, or amount of the entity's future cash flows is expected to change as a result of the contract, and it is probable that the entity will collect the consideration to which it will be entitled in exchange for the goods or services that will be transferred to the customer.
Satisfaction of performance obligations. An entity shall recognize revenue when or as the entity satisfies a performance obligation by transferring a promised good or services, included an asset, to a customer. An asset is transferred when or as the customer obtains control of that asset. Accounting for expenses. Expenses are the decreases in economic benefits during the accounting period in the form of outflows or depletions of assets or incurrences of liabilities that result in decreases in equity, other than those relating to distributions to shareholders. Expenses include both expenses and losses because they both decrease economic benefits.
Recognition. Expenses are recognized in the income statement when a decrease in future economic benefits related to a decrease in an asset or an increase of a liability has arisen that can be measured reliably. An expense is also recognized in the income statement in those cases when a product warranty arises. So, dito naman sa pag-recognize ng expenses, ma-recognize mo daw yung expenses once na yung asset mo ay bumaba or nag-decrease at yung liability mo ay tumaas or nag-increase. Lastly, we have here the key terms. The par value, share capital, and equity. Par value is the nominal amount printed in the share certificate. Share capital is the money a company raises by issuing common or preferred stock. It means the total amount raised by the company in sales of shares. Equity represents the value that would be returned to a company's shareholders if all of the assets were liquidated and all of the company's debts were paid off. And that's the end of our report. Thank you for watching and thank you for listening.